Hello, and welcome to our channel. Have you ever heard about compounding interest? Indeed, you've heard this term somewhere, but if you don't, then there is no need to worry. In this video, we are going to discuss this time, compounding interest. All you have to do is please don't break contact with the video, as things will go hand in hand so that you may not miss any crucial points. As usual in this video, we will try our best to provide quality information to you. We will be trying to discuss the compounding interest in detail. Without any further delay, let's start discussing compounding interest with its definition. Compound interest is interest charged on a loan or deposit. It is the most widely utilized idea in our everyday lives. The compound interest for an amount is determined by both the principal and the interest earned over time. This is the primary distinction between compound and simple interest. If still there remains any ambiguity, let's discuss another definition to understand it in a better way. Compound interest is computed on the principal and the interest accumulated over the preceding period. It differs from simple interest in that interest is not added to the principal when computing interest for the next month. Compound interest is generally symbolized as CI in mathematics. Compound interest is used in most transactions in the banking and financial sectors, as well as in other industries. It is hoped that the definition of the compounding interest is crystal clear now, and further in the banks, it can also be understood. If we look at our bank statements, we will find that some interest is credited to our account each year. This interest rate changes from year to year for the same principal amount. We can observe that interest grows with time. As a result, we may deduce that the interest imposed by the bank is not simple. This interest is known as compound interest or CI. Also, by using examples based on real-life compound interest applications, one may comprehend why the return on compound interest is greater than the return on simple interest. How can compounding interest be calculated? You'll be thinking about how compound interest works. And how can it be calculated? Compound interest may be calculated in a variety of methods in mathematics, depending on the context. To make the computations easier, we may utilize the compound interest formula. To compute compound interest, we must determine the amount and the principal. It is the difference between the amount and the principal. Compound interest equals amount, principal. As seen in this equation, the compound interest depends on the difference in the amount and principal. So, you must have a light knowledge about the amount and principal in the interest. Then the calculation of the compound interest will be a cup of tea for you. The principal is commonly used to refer to the original sum of money borrowed in a loan or put into an investment. It can also refer to the face value of a bond, the owner of a private company, or the chief participant in a transaction. How can compound interest be beneficial for you? Compound interest is the finest method to get rich if someone has got some amount to invest. As Albert Einstein once said that the concept of compounding is the most potent force in the cosmos. This power reveals itself in investment and finance through compounding returns. In layperson's terms, compound interest means you start earning interest on the interest you get, accelerating your money's growth. Being the richest is not a condition to get benefit from compound interest. You can be benefited if you are an ordinary man. This is one method used by many successful investors to develop their fortune. But compound interest isn't reserved for the investors. You can benefit from it through savings accounts and investment portfolios. For example, if you start with $500 and earn 10% interest each year, you'll end up with $550 after a year. Then, assuming you make 10% interest on that $550 the following year, you'll have $605 by the end of year 2. The practice is repeated until your original $500 surpasses the interest earned. These were a few examples and explanations of compound interest. Now we move to the next myth that compound interest is impossible for lay people. Is it possible to get rich through compound interest? Yes. Compound interest is undoubtedly the most effective driver for wealth generation ever devised. For thousands of years, merchants, bankers, and other entrepreneurs have used compound interest to grow wealth. Clay tablets, for example, were used more than 4,000 years ago in the ancient city of Babylon to teach pupils the mathematics of compound interest. Warren Buffett became one of the world's wealthiest persons with a business approach that required meticulously and slowly compounding his investment profits over lengthy periods. Compound interest will certainly be used to build wealth in some way or another for the foreseeable future. Power of the compounding interest. In essence, the power of compounding is the process of adding interest on interest, meaning that the amount of money you invest will result in returns from both the initial capital and the collected earnings from earlier compounding periods. Thus, the force of compounding eventually aids in the gradual growth of your wealth. Leading banks and commercial organizations provide a variety of investment alternatives that credit compound interest on your invested funds. These investment plans often feature a particular compounding period, such as yearly, monthly, or even daily, allowing you to take advantage of compounding as needed. The idea of the time value of money, which holds that money changes depending on when it is received, provides the basis for compound interest. The ability to invest $100 today to produce dividend and interest income makes having it now preferable to receiving it in a few years. These funds can increase thanks to compounding. The opportunity to collect compound interest would be lost if you waited 2 years to acquire that $100. It is referred to as an opportunity cost. The components for accumulating wealth are compounding and patience, as you'll see if you grasp the time value of money. Adding figures to a compound interest chart that displays how much your money may increase over time can also help you comprehend the power of compound interest. For example, a 20-year-old who invests $10,000 today in treasury bills and leaves it there for the next 50 years, while earning an average of 4% annually, will have $71,067 if the purchases were made through a tax-free account like a Roth IRA. They would have $2,890,022 if they had made stock and real estate investments over the same period and had an average yearly return of 12%. Thanks to the power of compounding, adding asset classes with greater yields would generate almost 40 times more cash. Compound interest is a straightforward and effective technique to increase money, but patience is required for it to pay off. How may compound interest and time aid in realizing the typical person's ambition of becoming a billionaire? The easier it would be for you to become a billionaire, the sooner you start investing. Becoming a billionaire is now easily possible with compound interest. It's not a joke. Let's make you a billionaire with an example. If you began investing at the age of 25, which earned 7.64% annually, you might become a millionaire by 65 with just $314.11 in monthly savings. However, if you wait until you are 40 to start saving, you will need to save $1,107.39 every month to reach $1 million. This was a short explanation to highlight and make you understand the immense power, wide scope, and crucial importance of compounding or compound interest. In this video, we have explained the basic definition, importance, calculation, and its power in our lives, and how it's playing a role in our lives to improve our financing and savings. In this video, we have also tried to highlight the importance of the time value over money. Time is a much needed factor in our lives and progress. Indeed, we thank you, viewers, for staying with us. Please make sure you like our video and appreciate our efforts by subscribing to the channel. Signing off, stay blessed, good.
Bye.